Hi, I am back with another YouTube video, and today we are going to be learning all about pre-qualification and pre-approval. So sit back, relax, get your notebook pad out, and get ready to write notes and get into this video. So you may have heard the term pre-qualification and pre-approval before. They are almost the same, but each of them are slightly different. And sometimes the words are used interchangeably, but I'm going to go ahead and explain what the main difference is. So when it comes to pre-qualification, usually this comes before pre-approval. Pre-qualification is going to be the lender comparing your debts to your income and the amount of assets you have. They're generally going off of the information you tell them so that you can know an estimated amount of mortgage that you are approved for. On the other hand, when you get pre-approved, they may ask for tax returns, your W-2s, pay stubs, and things like that. They will ask for actual documentations to get more of a specific number that you will get pre-approved for. And a lot of times this will be an inquiry on your credit report so that they can dig deeper. And so it's not just based off of the information you tell them, but it's actually verifying that information with documents. Now, when you go get pre-qualified or pre-approved, if you are approved, they will give you a letter, and usually with this letter, that will give you the go-ahead and a ticket to start searching for homes. In most cases, the pre-approval letter is going to be a lot stronger because they have verified your credit history with documentations over the pre-qualification, but either or will work in most cases. So once you have been pre-approved and you found a home that you really love, the next step is going to be given that signed contract for your home that is under contract to your lender, and your lender will start what is called the underwriting process. During this time, they are literally going to verify everything that you've told them. They may even ask for the same documents over again, like your W-2s, your tax returns, pay stubs. They'll look all into your finances, all up in your bank account. So during this time, during underwriting, and even before, as soon as you start really the home buying journey, you want to make sure that you're not making any large purchases such as a new car. You want to make sure you're not opening new lines of credit and getting new credit cards. You want to make sure that you're not having large cash deposits into your account that you can't account for. You just kind of want to go steady, do your normal thing, do your regular grocery shopping, gas, pay your bills on time, all of that, because the lender writing during, did I say lender writing? The underwriting, oh my gosh, the underwriter during this time is literally just checking for everything. They want to make sure that their investment in you, by them giving you a loan, is not going to be risky, and it's going to be safe, and that you're going to, at the end of the day, pay back that mortgage on time, every month. So that's the main purpose of underwriting, to discover if the borrower could perhaps be risky or could perhaps default on that home mortgage, which you do not want. You don't want. For my married couples, when it comes to my married couples and getting pre-qualified or pre-approved, if one spouse credit score is a lot, and I mean do a lot higher than the other spouse's credit score, and maybe this one spouse has a lot of things to work on in regards to their credit, I would recommend for the person with the highest credit score, the best, credit history and things like that, to apply a loan, because the lender is not going to take an average of the two credit scores. They will literally take the spouse with the lowest credit score. So to avoid all of that, it's just best for the person with the highest credit score to apply a loan, so you have the best chances of getting approved. Now, if you get approved, congratulations! Woo! This is like your ticket to go home shopping. So when you go to an amusement park, right? You gotta buy your ticket at the concession stand, whatever, the entryway, and they give you a ticket. I forgot, I haven't been to an amusement park in so long, but they give you a ticket. You go inside, and with that ticket or that wristband, you know exactly what rides you can get on. You can get on your tall roller coasters. You got some medium roller coasters. coasters, got roller coasters that go around, you got your kiddie rides. It's literally the same in home buying. And if you relate that analogy the same, with the pre-approval, pre-qualification letter, if you have been approved, they will give you a ticket, which is your letter, and you can then go out searching for homes based on the letter that you have received. You may have gotten approved for a mansion, you may have gotten approved for a luxury home, or you may have gotten approved for a home that just needs a lot of work. So that's great. If you've got that ticket, you can go look. If you didn't get an amount that you necessarily wanted, you can take some additional steps. Ask the lender what you can do to get qualified for more if that amount isn't necessarily what you wanted or what you were looking for at the time. So say for example, you get denied. It's not the end of the world. It's actually good that you have still took that first step, because the lender will literally give you a blueprint and tell you of things that you need to do so that you can qualify. So they'll give you a roadmap for success. So you can go ahead and start knocking these things. Home ownership is possible, but you do have to do the work behind it. And when the lender gives you a set of things that needs to be done, you need to be diligent about accomplishing those things if you want the home. Now, if you want to rent for the rest of your life, then don't do what they say. But if you want to own a home, you need to take heed to the advice that the lender has provided you with. Shop around, shop around, shop around. When you are looking for a lender, you want to make sure that you shop around. You want to make sure that you interview at least 3 lenders and find a lender that you are comfortable with, who you can ask questions to, because you will literally be talking to that lender a lot during the home buying process. So you want to make sure that you are comfortable with them. I tell this to my clients all the time. I know me personally, my husband and I, we spoke with our lender all the time, and she was always readily available to answer our questions, whether we called her or emailed her or text her. Usually your realtor will be able to recommend lenders for you to go to if you don't have an idea of where to start. Some people start by going to their bank if they have a good banking relationship with them, but I would recommend to reach out to 3 different lenders, because they all have different types of programs that are available to first-time home buyers and buyers in general, and they also offer different interest rates, which is going to play an important part in how much you end up paying back on your mortgage over time. Now, each time that you are reaching out to these lenders, they are pulling your credit, so it will be best to shop around for these lenders within a 14-day time period. A lot of the lenders tell me 30 days, but I'm telling you 14 days because it really doesn't take that long. It's not that long of a process to pre-qualify or pre-approve with the lender. It's super easy. They're going to ask you questions and you'll just give them the information that they ask for. So if you could take one day out of your life to reach out to 3 lenders and just knock it out, say on a Saturday or a Friday or whatever, and get it all done, that's going to put you in position, because if you wait 3 months later or 90 days down the line and try to reach out to another lender for your mortgage, then that's going to come up on your credit report as 2 separate inquiries, and you want to try to limit the amount of inquiries on your credit report, which is why you should do it within a tight time span, because they don't count multiple inquiries within a tight span, a tight timeline as multiple. They count it just as one. So take my advice, shop around, but do it within about 14 days. Now, when it comes to the almighty credit score, most of the lenders that I have been speaking with has advised for me to send my clients over when they have a 640 and above. Back in the days, even a few months ago, they were saying 620, but now they are saying 640. And the reason for that is because a lot of these loan programs that are government backed are getting a lot more stricter, especially during COVID-19, on the requirements. So if you're in the 640 club, congratulations. And your credit profile looks relatively good to go, then I would encourage you to go ahead and and try to get pre-qualified or pre-approved with a lender for your mortgage. Well, you guys, thank you so much for watching. That's all I have for you today. We mainly talked about pre-qualification and pre-approval. If you liked this video and enjoyed it, please give it a thumbs up. And be sure to comment and subscribe to my channel for more content as it relates to real estate. In addition, if you have any questions, please feel free to shoot me a message directly. You can find me on all social media at Camille. And what else? I think that's all. Thank you guys for watching and stay tuned for my next video.